Hello everyone and welcome. This is a live analysis ahead of the inflation, of course, figure today. Actually, we are few minutes away. So as usual, it's your session, it's your time for any questions, for any anything you want me to analyze to have a look together. This is your session, as I keep saying, so feel free to ask anything, absolutely anything you want. We will try to help you as much as we can. So before I scan the markets, let's make a quick briefing of what's happening so far today and what we're expecting in few minutes from the inflation figure. We're just 17 minutes away from the US inflation, okay, which actually, even though is the hot topic of the month, along with the NFP inflation and price and producer price index, are the three most important data of the month and of the year, and etc. However, this time is expected to is expected actually to not really to change the policy outlook and neither to change the market sentiment. This is what is expected. What the forecast from the economists, from analysts all over the world have projected. So let me just quickly, what is the inflation effect? How, I guess you're asking me, Martin, how it could affect the gold. Have in mind that uh, a high inflation, right? Or even an in line with the an in line steady inflation at 3.4%, it could indicate that still inflation is quite high, stubbornly high. So that indicates the that not only March, but even April, even May, even July scenario for a rate cut might be postponed. So actually uh, that could actually add pressure on gold, theoretically. Okay, theoretically, on the possibility of further postponement of rate cuts is something that could get dollar stronger, and as a consequence, it could add some pressure on the gold. So gold for sure is in focus today, right? And it's actually it was quite to the upside ahead of the inflation today. But yes, have in mind that the theory the theory actually implies that this could have a negative impact for the gold. For the time being, gold, as I can see, let me just also enable my MT4. Here we are. So gold, yes. So you can see this is the 1 hour chart, my dear friend. Gold kept moving on the upside, as you can see so far today. This is on the anticipation. It seems on the anticipation of the data soonish, and just to remind you that inflation in general, actually the market participants tend to hedge gold against the inflation. Okay, it's a practice that has been quite fundamental. So today's figure obviously will give us some further clues regarding the timing of the widely expected rate cuts, and on this anticipation we could see gold holding to the upside. That's mainly due to the fact that it's a safe haven asset. It looks like the markets were shifting elsewhere ahead of the data. Obviously, that's why we have seen the gold, as I can see over here, um, 2028 level. Yes. 2020, sorry for that. 2020, um, 28 level, like more than nearly 1% rise, ahead of the expectations um, for actually a fairly stable inflation. So yeah, today I didn't have the chance to explain what is expected today, guys, but you should have in mind that today's inflation is expected to be fairly stable. So, considering what we have seen from the most recent US data, it seems that the odds for a slowdown in the inflation are quite low. We're not expecting neither a break higher, I mean, a rising inflation. We're expecting, and this is what the forecasts have presented so far. We're expecting a fairly, as I said, steady inflation. More precisely, the odds are for a 2.9% year over year basis. With the last month's reading to be at the 3.4%. But since we have the PC later on this week, it looks that uh, the one that will give us further clues is the upcoming data, and not so much the inflation one. We have still this week, we have consumer sentiment, we have PMIs, we have housing figures. Yeah, so today, even though there is a lot of anticipation, um, uh, considering that we have seen some revisions in the beginning of the week. Okay, and the revisions show the lack of upside surprises for inflation, so that gave the green light that inflation might be steady. So let's wait and see. Nonetheless, guys, I want to get back to Martin's question, yeah, regarding gold. Okay, have in mind that a soft. Oh, there are more questions coming. Perfect. So, guys, have in mind, okay, that a soft reading today, a soft data, inline data, or something that shows just a tiny slowdown, that, as I said, could impact the interest rate outlook. So a soft inflation could be positive for gold, right? Um, because it will make it more attractive. Okay, it will make it more likely. Because you remember, soft inflation gives the green light for interest rates to fall. Okay, so that's why this will have as expected to have a negative impact for dollar, but a positive a positive impact for gold. So have in mind, a softer inflation today will be positive for gold. However, a solid inflation today will be negative for gold. It's all about changing the odds for changing the timing for interest rates cut. Okay, the lower the interest rate, or the speculation for interest rate cuts, okay, lower the opportunity cost for holding gold. So they make gold cost lower. So that's why, remember, it's a non-yielding asset. Gold is a non-yielding asset, so they have a negative correlation. Soft inflation, positive gold, negative dollar. Strong inflation, negative gold, stronger dollar. Okay, clear? So yeah, you all chill. I need another encounter officers. uh a lot of questions over here. GBP USD, are bulls winning, or is it the end of the bull trend? Okay, we're gonna see everything in a bit. Okay, we're gonna see everything in a bit. I should prepare myself actually to share the calendar with you. But since you mentioned GUBI, this is the acronym or the abbreviation for GDP. Oops, share comment for pound against yen, which I keep saying, guys, be careful with pound yen because it's the most considered to be the most volatile um, currency in the market. So I'm not sure Guppy, are bulls winning or is it the end of the bull trend? So let me check this out, dear market wizard. So as we can see over here, actually there is a resumption, my dear friends, so far for Guppy. Okay, okay, for sure we don't have a confirmation yet, so bear with me. But the overall trend remains to the upside since end of December, mid of December. There was a bit of a pullback in January, but the asset managed to extend higher to break the recent highs, to break the upper level of the channel, okay, and to extend higher today, actually breaking 189 level. So I'm gonna zoom out for you to see. These lines are from a previous live analysis that I did. So look at that. This is a daily chart, broken the 1 month resistance. Actually, it's more than a month's resistance. November, December, January, 3 months resistance. Because look at that. Back in November, it still tried to retest 189, didn't manage to break it. So we have the breakout of 3 months resistance over here. But you need to be careful. The day is not over. I'm checking the daily chart. So this is just food for thought tonight at the US Open. In the meantime, in the 4 hour chart, I can see that there was a nice decisive bullish candle, but inflation is just 6 minutes away. So this might cause a lot of volatility and a lot of noise. So we need to keep an eye on the previous resistance, on the previous highs. And to be more precise, that level is at 188.90. So yeah, this is the immediate support level that could clear a bit the situation. It could make it clear whether there is a resumption, a start, an extension, a continuation of the so far 2 months, more than 2 months uptrend, or whether the asset will get back into a ranging market. Okay, so um, okay, you mentioned the bull trend, market wizard. From what I can see, also from so you can see from the momentum over here, even though on this pullback we could see the RSI turning slightly lower, indeed it still holds above 50 level, right? You see, retested 50 level once, retested 50 level twice, and start rising higher, flirting with the 70 barrier. So what that states, that presents that there is increasing bullish bias, okay, an increasing bullish bias still in the guppy. So I'm gonna use also my MACD. Just I would like to check what's going on over there. Let me just open everything over here. Perfect. So yeah, run out of steam a bit, still well above zero, still positive. Histogram just crossed above signal line. So it doesn't look that the trend is running out of steam anytime soon. Okay. What should I do by yourself? I cannot advise, okay? I cannot advise. Don't listen to anyone in the forums or just, okay, try to constantly learn. Don't listen. If someone tell you buy yourself, no, don't listen to him. Listen to yourself. Have a plan. Check. Did it break my support and resistance level? Did it broken my trigger point? Did it broken? Use technicals, use fundamentals, use risk and reward ratio, risk your risk management. Have a plan. Treat trading like a serious business. Have a plan. This is what my webinar was for earlier today. Don't forex beast. Don't listen who what I will tell you or what anyone in a forum or something will tell you. Okay, you need to which time frames you're trading. You know your capital. You know you are risk averse, whether you are a risk averse person or not. So trade what you see and not what others are telling you or what you think. Okay. As I said, the soft inflation implies to a positive gold. I talk too much, right? Yes. Good afternoon. Good afternoon, Chris. Good afternoon. Guys, is the audio okay? If it's too loud, let me know and I will try to somehow fix it. Uh it's remaining only 15 to talk fast. I need another account officers. I'm not sure what you mean, unique sound, but if your account has been deactivated due to the fact that you weren't using it, please contact our support team. Um, fairly stable, yes. It's just 1 minute to go, so let me share my calendar. Let me share the calendar to see the results together. So guys, so let's see. So come on. So not refreshed yet. Refresh this. Okay. Oh my God, Jesus Christ. Not only is not soft, but nonetheless is solid. It it went higher. So as I said, a solid, strong inflation will have a negative impact on gold because you keep asking about gold. Um, so millionaire Marvin, where you were right, but let's see whether the markets followed or not. Let's see. That's the gold. And yeah, here it is, guys. Let me stop sharing the calendar and let me start sharing gold with you. A solid, a strong inflation, a spike in inflation, indeed, as my friend here, Millionaire Marvin, said, was negative. Don't sell it. It was negative for gold. I warned you that the soft inflation is positive. The solid inflation is negative, and this is the interpretation. Um, uh, Yes, you were right, Phoebe. If there was supposed to be a positive inflation, that would be the will gold. And yes, exactly, this is what we've seen. You are absolutely correct, guys. So unfortunately, not something that the central bankers wanted. Definitely not something that the central bankers wanted. That is a clear, uh, stubborn, as I said in the beginning of this live inflation, that indicates that there is the rate cut soon. The central bankers shouldn't proceed with the rate cut anytime soon. So that push further back the rate cut scenario, even in the end of the year. So we might start seeing a 2025 scenario for a rate cut if the data keep indicate a very hot economy, a rise in the inflation, 3.9%. I wasn't I wasn't expecting that. I was expecting a high number, but at least in line with the previous reading. I mean, at least in line with the previous month's level, but not definitely 3.9%. How how do you see Guppy? How do you see Guppy? So okay, before we go to Guppy, dear David, let's say big gold, very very just because there are a lot of gold lovers over here. Okay, so guys, remember this, the immediate, okay, I don't know what kind of trader you are, but the very very immediate support level is on the 2010 territory. Okay, 2010 over here. um 1st of February, uh, actually, end of January bottom, and also the second support of the day. You can see that is nearly there, just $5 above it. Actually, but the key support level, I will get this all out of the way. Let me just, is the 2000 level. Okay, you need to keep an eye on the 2000 level, where it is over here, 2000 level. Okay, because other than a round number, so a very strong support level, also is the is more than 2 months support level. Okay, so a break of the 2000 territory, round number, key support level, 2 months support, a break of 2000. Okay, we are far away from 2000, but you need to put a line on just to monitor it, because anytime today or within the week, a break of that level could open the door to November bottom. Okay, a pretty, so it could end up in a free fall. For the time being, there is a very very strong support level at 2000, and as I said, 2010 is the very next immediate support level. Also, is the 50% Fibonacci level since the upper leg that we have seen since November. So, to the downside, 2010 for the short term traders, 2004 as well, and then the 2000 is a key level, because if it breach and breaks, that could open the doors to November's bottom. Okay, November's bottom. Let me do one last exercise that I would like to do is with my Fibonacci extension. Okay, dum, dum, dum. Okay, easy peasy. Okay, yeah, guys. So intraday, a very very bearish candle, soft inflation. Sorry, strong inflation, negative gold. It's a non-yielding asset. Remember, so that's why that indicated a higher costs for holding gold. That's why we have seen this dive, and I guess that dollar is getting stronger and stronger. So where is my dollar? Dollar. Sorry, just a second. This is cable, by the way, another commodity related asset, but you can see how massive cable dive is due to the dollar strength. I will come in a bit back to the cable, but I would like very, very short, um, uh, very quick to check dollar index together, and then Gubi, as I promised, Market Wizard. So, sorry guys, I lost the dollar index. It's my dollar index. Here it is. Okay. So, what we have over here, the obvious basically. Huge jump, and that's key, guys. Look at that it's the daily chart. Okay, I put the daily chart on purpose just to show you that we have finally broken these 4 months resistance. And look at that. Doesn't look like, okay, we don't have a confirmation obviously, but it looked like an inverse head and shoulders formation. So keep an eye on that. It's something that I mentioned in the past for you to keep an eye on, but it looks like an inverse head and shoulder formation with the neckline being retested right now. So keep an eye tonight on whether the asset will close above it. This week is crucial for the direction of dollar index because a continuous move above the neckline of this head and shoulder formation could open the door, okay, could open the door in the medium and long run back to 106 or even 107 territory. Nonetheless, let's turn down to the 1 hour chart or even 30 minutes chart for our beloved intraday traders, right? And let me also set my um, just a second, wide intraday, here we are. So I have my fast moving averages over here, jumped, broken and breached the third resistance of the day at 104.50. Stochastic, you can see that stochastic is aggressive to the upside, is like steep, very steep slope. The stochastic RSI, the same already breached 70. Obviously, it's too early to tell. We need to wait for this candle to close in order to see whether the market will come down a bit or whether it will hold gains. But have in mind that if we see the candle closing above 105.30, okay, so closing actually at least extending and closing above the previous high over here, that could indicate further steam to the upside, right? With the next level, resistance levels at 105 and 105.20. So I'm gonna apply for the intraday traders. You can see I've put some Fibonacci's on and it already broken all the possible resistance levels. So what we have over here, the very next immediate resistance levels, if and only if we see the 30 minutes candle closing in profits above 104.30 level, then the next immediate intraday resistance levels are on 104.70 and 105.30. Okay, long way. You need to be a bit patient Oh my God, that's massive. That's absolutely massive. It seems that bulls are keep joining and attending to the dollar strength, and that's in line with fundamentals, I'm afraid, guys. So uh, it looks like, as I mentioned in the daily chart, it looks like we might have a confirmation for a long rally. Nothing sure yet. We need to see the tonight's close, but the data definitely benefit on the dollar. That's a huge, massive rally. So as you can see, already extended above the third resistance of the day. So the very next level to be closely monitored is just another 10 up to 60 pips higher. So Gubi. Let's move on to Gubi. Pound yen. Here we are. Broken the. So not a, there is a lot of cautiousness, a lot of, yeah, dear David. Oh, there are a lot of questions that I have missed. Sorry. Um, it's $1 yen. Okay, let's check together the Gubi. For the time being, my dear friends, you can see that it's still ranging. Okay, still ranging. That's a like, yeah, it's still ranging. Even though there was a nice decisive bullish candle over here that that managed to turn the asset back into the ranging market that it had been the whole day. Obviously, a strong dollar, a risk boost risk sensitive assets such as pound yen. Okay, and that actually we could see that RSI keeps rising. Let me set the intraday whiteboard. Let's see the stochastics as well. So moving averages are keep pointing higher. They were a bit steady the last few hours, but now they started turning higher. RSI remains close to 70. Stochastic points higher. So, so. As I said earlier, sorry. As I said earlier, a very, very decisive move to the upside for pound yen so far today, with this latest 4-hour candle. Okay, actually, if I put the 1 hour as well, this latest, the European session had been quite promising for pound yen, and actually, we could see that there is further steam to the upside. You can see moving averages keep rising, RSI holding higher, stochastic turned a bit, but you can see that is still hold above 80. So that indicates that this pullback was just a correction and there is further steam to the upside. So my dear friend, we'll need fractals for this one, or parabolic SAR. I want to see whether there is any shift in the sentiment. Parabolic SAR. No. Excellent. Okay. Far away from the candles, still below the price. Okay, you can see a dot above the price as well, but ignore it because this candle hasn't closed yet. We are still missing another 15 minutes, so that's not a clue. But the fact that we keep having we can see the bulls fighting This is something that indicates an increasing bullish bias. Keep an eye on Guppy, since there are a lot of you trading Guppy. Uh, Listen to me just for a second, okay, guys? You need to wait for this candle to close. If this candle close positive, okay, away from the open price, that will be a bullish indication. Why? Because it had all these long tail at the bottom. What that tell us? It tell us that the bulls, regardless of the fact that sellers try to push the price lower, the bulls managed to take the control and to open and to close and to boost the price further higher. So in 15 minutes, that the candle will close, you need to keep an eye on whether it will close positively or whether it will close dodgily. If it closes positively, that indicates further bullish bias, further upwards movement for cable with the next resistance levels. Use your Fibonacci's or your ATRs, okay? Uh, the next resistance area is on the, here we are. Actually, I placed it wrong. So, yeah, that's absolutely correct. Okay, so what we have over here, 189.75 is the third resistance. A more imminent one is the 189.70, and then we can use either the 138 or 161 if it keeps moving to the upside. So these are your very, very immediate near term resistance areas. Here over here, 189 up to 190 territory. Resistance level for intraday resistance level, immediate resistance level for Guppy. Now in the medium term, okay, as I mentioned, guys, close positively away from this 3 months resistance could open the doors to actually to new record highs, because these are levels that Guppy has never seen before. So you might possibly try to use your ATR. So ATR in the daily chart is at 115. 115. So that should be somewhere at 190.30. 190.30. If and only if the asset closed tonight above 3 months resistance. And twice the ATR, that would be 2 points higher. So 191 here. Okay? Excellent. Now, dollar yen, 1 hour and 4 hour. Similarly to pound, and considering that dollar is on a rally, we should see dollar yen to the upside as well, with a pretty weak yen, obviously. Let me put the whiteboard on. So what we have over here, another jump, 150.45. Guys, if you were on our previous lives, this is something that we already mentioned like weeks ago. The rally on yen confirmed the resumption, I should say, the continuation of the uptrend confirmed as soon as we saw last week the break of 149 level, right? So yeah, it was something that was quite and the attention is basically, it has been weeks now, because it managed also to return more than 50%. So actually the bullish signal for dollar yen, it was from the moment that it broken the 146 level. So this correction, the fact that they hold 146 and rebounded, it was an indication that dollar yen could possibly return back to the 2023 highs and the 151 or even 152 level. Very weak yen, quite strong, actually very strong dollar, but is mainly, this rally is mainly, the overall rally is mainly the yen weakness, um, considering the central bank, the Bank of Japan, and the deviation that the two banks are having right now. Um, Even with the change in the policy from Bank of Japan, the differentiation between the two policies is so, there's a huge gap that could keep yen under pressure against dollar, unless if we see any intervention from the Bank of Japan. Yeah, but yeah, 150.50 already breached. That's the 88.6 Fibonacci level. So October's top, the 151 or even 156, 5160 level uh, is in focus. 1 hour chart and 4 hour chart you mentioned, volatile. Sorry about that. Already broken all the moving, all the resistance of the resistance of the day, all the pivot points of the day. So I'm gonna shift further down, further lower. You need to be a bit patient, guys, to see how this candle will close, okay? Because it's already, we are in an extreme condition, okay? In an extreme condition, you see, it already. So let me fix a bit this. Here we are. We have already it has already extended 261 more times than the previous down leg. So yeah, 151 and 151.40 are still. So here, let me put that on. 151, 151.30, but make sure that you're waiting for this candle to close and to see whether it will manage above the mid level. So by measuring this candle, the mid level of this candle is somewhere here. So if the candle closes above the midpoint, and consider that momentum is still increasingly positive, then it seems that there is only one way to go. Yeah, gold remains to the downside. Boom, 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 boom. We have another 5 minutes to go until this candle closes. You need the euro analysis, of course, euro dollar. Sorry, let me just. Guys, the story of the day is the weak dollar. So you understand that everything. So weak dollar, strong dollar, weak yen. So yeah, so it's the story of the day. So because of the inflation, obviously. Plus, since you want a euro analysis there, you men, you can see clearly now that the floor that we were having at 107 level has broken. Okay, momentum keeps moving lower and lower, right? So that opens the door, I'm afraid, to the previous support levels. So that opens the door to 106.50 and even 105. But we need to confirm the closure, the break of 107 level, because on 107, other than the 3 month support, is also the 61.8% Fibonacci level from the up leg, the uptrend that we've seen since September. So it's a very crucial support level, because if it breaks, it will open the doors to the downside, and more precisely to 2 years, isn't it? So no more than a year and a half bottom, right? So actually, yeah. So now intraday, oh god, that's just, guys, the situation is extreme. We might need to see a bit of a correction, actually not precisely a correction, but after such a massive sell-off, we might see the assets stabilizing a bit, consolidating a bit before another attempt to the downside. But fundamentals and technicals so far support a strong dollar, so a weak euro dollar, a weak pound dollar, a weak gold, a strong dollar again, right? So just 2 minutes to go. So my dear friend, as I mentioned, keep an eye on the 107. A break of it could open the doors to 106.50, 106, 105 level. Anyway, euro dollar has been to the downside since December. It's in a clear downtrend, so you can consider applying a channel over here, right? In order to monitor and to monitor your next support level, or possible your next resistance level. So for the time being, 106.55 is the next support level for euro dollar, with the sellers in control. You can see that MACDs keep rising to the downside. RSI is falling. It could not stochastic, because it's something that I use from my 1 hour chart, but keep falling. And it remains below 50 since the end of December. A clear indication that we have a clear down channel, a downtrend for euro dollar, and fundamentals are in line with this technical view as well. Intraday now. Okay, the candle close, guys. Look at that. Look at that. Let me put the intraday setup. Look at that. The 1 hour candle just closed, right? Let me put the 30 minutes instead. Look at that. Very, very big bearish candle. It looks a bit oversold, but as you can see, there is further steam to the downside. We might see it stabilizing a bit at 107. Like, we might see a bit of a consolidation over here, but that would be that would be just a limited consolidation before another attempt to the downside, considering the fundamental, considering the increasing bearish bias, the moving average that are keep pointing lower. There is a lot of pressure, sellers in control. So yeah, that's pretty much it. Bitcoin effect. Bitcoin should have fallen as well. However, it had been to the upside due to the. Let me just. Bitcoin should have seen a significant pullback, significant correction. Let's check together. Ethereum, Bitcoin. Here we are. And it is what it is. A milder, a softer decline, but still in a decline due to the strong dollar. But the thing about Bitcoin, guys, is that um, is is that regardless of the strong dollar, it holds it holds the gains that we have seen so far, so far this year. So so there is a strong uptrend, right? So the asset, as long as the asset doesn't turn below, actually, let me fix this a bit. As long as the asset holds above 48,500 territory, the outlook for Bitcoin remains positive in the medium term. So there might be a bit of a pullback, a bit of a correction because it has been overbought, right? If I put the Bollingers, you can also see, I can make it clear why I'm saying that it's overbought. You see outside Bollingers, one day, 2 day, the third day outside Bollingers. This is an extreme condition, an overbought condition. So we might see Bitcoin consolidating a bit, but as long as it holds above 48,500, the overall outlook remains positive with all the attention back to higher, actually, back to 57,000, 60,000, even 65,000 level, right? It was a nice, strong rally so far with momentum keep rising. Remember that the approval of the ETFs, of Bitcoin ETFs. So the strong dollar could be just could could limit a bit, could indeed put back Bitcoin, but uh, Bitcoin remains strong as well. So over here is more of a strong Bitcoin rather than strong dollar. So yeah. I'm not sending signals, guys. I can help you with anything you need. I can analyze any asset you want me, but I cannot provide signals. If you want signals, we have a auto charting service. It's a scanner, it's a scanning service, it's a signals provider. It's free. It's free. So there are not only just requirements. There is a small amount that you need to keep on your account in order to have it on your platform, but we don't charge it. It's for free. So if you want the signal service, please visit our website hfm.com and download auto chartist. Okay, euro dollar, we just covered it, so I guess you have seen it, my dear Ketron. Massive decline. Let me just get it back. Let me get it back. Euro dollar, euro dollar, euro dollar. Where's my euro dollar? And I think I've lost it. I think I've lost it. Just a second. Sorry. Euro dollar. Here we are with a massive decline. I think it's crystal clear. And you're asking me about euro dollar again. 30 minutes candle, oversold conditions. We might find the floor at 107, so keep an eye on 107 because over here it might find some floor. Okay, consolidate a bit before another attempt to the upside. But as I said earlier, fundamentals, technicals, momentum, indicate they all indicate the same thing. Pretty weak euro dollar outlook, a lot of pressure on euro, strong dollar, um, with a clear down channel since December. Use your channel for identifying um, any potential participation into the market. You can see that the latest low has already broken, and that opens the doors to 106, 106.50, 105 level, and so on and so forth. Even intraday, okay, we need to wait. You can see that there is a lot of pressure. Obviously, confirmed breakout of 105 or 107, sorry, it will open the doors, as I said earlier, to the 106.50 level. Okay, moving average, I keep pointing lower. RSI is oversold, stochastic it keeps pointing lower, that is further steam to the downside. Some consolidation might be seen around 107, but it is what it is. Yeah, so just another possible support level is what I said earlier. Yes, 106.75 this case. Some more imminent support for anyone that prefers fast environments. Guys, I cannot see any further questions. Let me scan through the market to see what else is going on, whether there is anything that I've missed, but definitely a pretty solid release. Unfortunately, not good news for the Fed. That push further back the possibilities, the odds for a rate cut in May or even June, if you ask me. Dollar is strong because of yields. Obviously, the 10-year yields, the yields, sorry, are higher as well. Um, uh, Also, a pretty hot inflation. Unfortunately, it's like the market is like the economy around the world is gone crazy or something. Now there are the as I said, a strong inflation today had as a consequence the probabilities for rate cut to blank even more. So from 150 points that we began the whole year, now the odds, actually now the points, the rate cut points have detected to 94. So there are now 94 points in cats priced in for the 2024, and that might detect even more if we keep having this kind of data, and we keep seeing a stubbornly high inflation, stubbornly high labor market. Uh, so that has a consequences, the stocks to get lower, the yields to get higher, the dollar to get higher, and gold under pressure. Gold, we haven't checked gold, sorry, we haven't checked stocks together, but stocks should have been to the downside. Nasdaq has been to the downside actually since early, very very early in the morning. Early in the morning, so here we are. That's S&P 500. Sorry, it's not Nasdaq. It's S&P 500. But let me put Nasdaq since it was the one that I think it felt the most. Yeah, 1.72% plummet. So here we are to the downside since the beginning of the week. a gap up down, sorry, gap down, as you can see in the euro in the US Open. This is a 15 minutes chart. Yeah, lower stocks, definitely lower stocks after the inflation. It is what it is. Remember that high interest rates are have a negative impact to the corporate sector, so more expenses for the companies. That's why that's negative for such index such as the tech heavy Nasdaq. Um, so what else? Any questions? Any further questions? No. I can see euro pound over here. So what else? I think that's pretty much it. Um, so definitely, uh, we're gonna see within the week and the month the the due to the data today, we could see the implied Fed futures to change significantly. For the time being, we can see that the traders have scaled back their bets on the likelihood of a rate cut in May. So from 50% to 30%. So and there are no bets for a rate cut in June either. So you understand that we have shifted to the last quarter of the year. Actually, don't know whether it's too late, but yeah. Henry, you need to log into your HFM area. Click on and requesting. There is on the tools box there is auto chartist. Click on it and request to there's a download box and you can click and you can download it. As soon as you download it, close your platform and open it again. There are videos, demonstrations. Visit actually the website hfm.com, click on auto chartist, and on the website we have step-by-step videos on how to download it. Okay, that is at the bottom of the page. That is how to log in, how to download, how to set it up. Everything is very, very easy, very easy. Okay. Euro pound. The very last question for Quech before I call it a date. So kind of the same. It has been to the downside. I mean, for many many months now. Obviously, the break of two of actually that was September, October, November, December, January of 5 months support just resumes the decline for euro pound. So an overall bearish outlook, my dear friend, for euro pound. But I guess you want to see together want us to see together the intraday picture. So extended broken the third support of the day, flirts the round 0.85 level. But as you can see, moving averages I keep pointing lower. So we need to check the next immediate resistance support level, sorry, and the next support level for euro pound is on 185 and sorry, not 85, sorry, not 84.93 and not 0.8488. That's the next immediate support levels, dear as you can see, RSI remains at the oversold territory, but stochastic overs here keeps pointing lower along with the moving average. So this shows that there is further steam to the downside. Um, yeah, there is a bit of a consolidation, but as long as the asset breaks 0.85, there are another 10 to 20. There are another two resistance levels, support levels uh, on the immediate Fibonacci levels at 123 extension and 138. So, yeah, further bearish bias intraday. Bam, 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 a bit of correction, boom, a bit of a consolidation, so a move and a break below the round 0.85 could open the doors to another 10 to 20 pips lower. Yeah. Okay, guys, I'm gonna call it a date. When will be the next HFM live analysis? We're gonna have one on the PPI release. It will be my colleague Michalis demonstrating, actually hosting a live analysis on the PPI, US PPI data. So yeah, that's the very next one. So guys, if there are no the questions, I'm gonna call it a date. So summary, just for you to remember: strong inflation, strong dollar, um, weak stocks, weak gold, weak yen, rising yields. Okay. Thank you very much. Yeah, last question, Phoebe. Yeah, go for it. Yes. Are you typing? Gonna scan a bit the news to see whether there is anything new until Phoebe post the last question. They might try with some speeches, the Fed speeches, some the policymakers. They might try to count down a bit the market, but for the time being, if I'm not mistaken, there is no Fed speech today. Yeah, there's nothing. There is the US crude oils later on. But yes, the bid was so massive that is crystal clear. So they might try with the policymaker might try with some comments to calm down a bit the markets, but as we keep saying, trade what you see, not what you think or what you're afraid it will happen, right? Stick on your charts, Phoebe. Phoebe, stick on your charts. Especially that we still have a lot of data coming. So we have housing, we have the PPI, right, which is very, very, very important, right? It's actually might be even more important than inflation today. And consumer sentiment this week. So if we keep getting the same signal, if we keep getting the same, um, as I said, the same indication regarding regarding a high um, sorry, regarding a strong economy, right? A strong inflation, a strong labor market, a strong confidence, a strong housing market, and etc. So, if we keep having such data this week, then we might see dollar sustaining gain, sustaining strength, and keep rising. So regardless if Fed speeches try to calm down the markets or trying to downsize the solid inflation, it won't matter. Data matters and what you see on your charts. So if you're not sure, just stick on your chart. Just keep an eye on your chart, on what you see, on whether it keeps posting higher highs and higher lows, or whether it keeps breaking resistance levels, and so on and so forth. Okay, it is what it is. Afterwards, it has been to the upside since December. So further data that point to a delay of interest rate cuts, and possibly, if we continue with this way, we might see interest rate cut take place 2025. If we see that coming, then dollar could return back to the 2023 highs. Okay, stick on what you see. Stick on what you see on your charts. Thank you very much. I'm gonna call it a date. That was a great question, by the way. I'm gonna call it a date. Take care. Now we have the US Open, so we might see further volatility, further pressure on stocks, especially since the US Open is right now. Risk management, set stop losses, set take profit targets, set risk and reward ratio before entering the market. Take care, have a great day ahead, and see you again actually on Thursday with Mihalis. Thank you. Bye bye.